Pops, what happened to the dinosaurs seems to be what's happening to Carvana. The breaking news just today, we have key creditors that hold $4 billion of the $7 billion. This is what happened to the dinosaurs, man. The dinosaurs had too much debt and then a meteor hit them, okay? This is what happened. Carvana has $7 billion of debt out there, $4 billion of which two of the key creditors came together and said, you know what, guys, we should be looking at bankruptcy, which makes sense. The company's trading at their market cap under $1 billion. This could have huge impacts on the used car market, Dad, and a foreshadow of what is to come. Break the news, Pops. What happened?
Well, apparently the creditors are concerned. Okay. They've got to the point where there's just so much debt.
Yep.
There's over $7 billion in debt. There's $4 billion of it that are controlled by less than 10 debtors. And those have agreed that they will work together with Carvana to try and restructure their debt or, well, perhaps even go bankrupt.
And Carvana bonds are currently trading at 50 cents on the dollar, which is not a good look. Pretty much a sign that most investors think they're going to default.
And there was an analyst who had a buy figure on Carvana earlier this year at $9, and he's reevaluated their situation, and his buy number now is when the stock reaches $1 a share. So they are in, I guess you could almost call it free fall at the moment. And you know, they are a major player in the used car market. Now, the number of cars that they have, how much that will impact used car pricing if they can't restructure the debt to the point that the debt service makes sense and they just have to keep lowering the prices of the vehicles, that could bode well for consumers because other retailers would have to try and match Carvana pricing wise as they lower the prices of their vehicles.
Carvana last quarter sold over 100,000 vehicles and bought nearly 100,000 vehicles. So they are a huge player in the space. You're absolutely right. Yes. And Dad, I think, and I pulled up the Manheim used vehicle value index because we've seen for the another month in a row, the third month in a row, fourth month in a row, more than that. We've seen for a significant number of months, wholesale used car prices come down. And this chart demonstrates what happened to Carvana. They bought cars as the chart was going up, and then the economy slowed down as a result of interest rates going up, and now they're stuck holding all of these cars that they paid too much money for, and they're not worth it anymore, at the same time as consumer demand has gone away. And where has consumer demand gone away the most? Affecting those who are in subprime credit situations, which is typically who Carvana and previously Drive Time, like that's their business. It was an online car dealer targeting subprime credit folks. And they're all, unfortunately, now sitting in this situation where Carvana is the subprime creditor and looking for some help.
Yeah, I just can't imagine that they've even amassed $7 billion of debt. That why potential lenders didn't understand the dynamics of what their business model was and couldn't forecast that any type of downturn in the economy was going to bode poorly for Carvana. It's like these lenders went into this situation just wearing blinders and hoping against hope that all the extraneous stuff that was outside of what they chose to look at didn't really come to fruition. Well, it is, and they're in deep, deep trouble. I mean, this is a major collapse.
Dad, I've already noticed, so on joinyaa.com/sell, we have a widget where you get offers from multiple dealers in your area. I've noticed Carvana offers haven't been showing up in our area. They used to.
Yes.
Okay, so that's an indication of what's going on, folks. You know, the days of your vehicle being valued at more than its original MSRP was, and Carvana was happy to just show up, buy it, never do an inspection, and then go make money. Those days are over. They're entirely over. And this Carvana collapse, and that's exactly what it is I think a moment in time where a business model didn't really work, but because of all these tailwinds, because of all this push and all this support, it could for a period of time. And now that there's significant headwinds. Thinking about getting auto insurance? Compare quotes from all the major carriers in one place. Join YAA.com/insurance. It's quick, easy, and no spam.
You know, one wonders, had there never been a pandemic, would Carvana have grown as swiftly? Would the stock market have looked at it so wonderfully if there had never been a pandemic? Because that's what drove their growth. And, well, you know, It just wasn't sustainable. And one of the reasons you don't see them making as many offers for cars as they used to, it takes cash to be able to do that. They have to preserve as much cash as they possibly can because they've got $7 billion worth of debt that they have to service. So it's not like they can just default on all that debt.
You know, it's interesting because the $4 billion, all this is, the $4 billion is unsecured debt.
Yes.
There's a $2.2 billion floor plan line with Ally Financial. So for those of you who watch the channel and know this already, bear with me, but car dealers do not pay cash. Most car dealers do not pay cash for their inventory. They finance it. So Carvana has billions of dollars worth of interest payments or billions of dollars worth of debt that they have tied directly to the cars that they have to pay interest payments on.
Yes.
As the vehicle's value is going to, like, you can very logically piece together why this is happening. It's led to some interesting decisions recently. We had Carvana, we saw selling their dealerships, selling their physical dealerships, and then leasing them back to themselves.
So they can raise capital.
Yeah, so that they can raise capital. So they just have to pay their monthly rent to their new landlord versus owning the property outright.
Sounds like they might not be able to make those rent payments.
All right, so let's end with this, Dad. What do you think is going to happen in 2023 as a result of this development? Do you think that this will drive used car prices down? Do you think like an AutoNation is going to swoop in, save the day, and slowly release the inventory? What's your take here? What impact do you think it's going to have on consumers?
Well, I think if Carvana fails, I think we'll see downward pressure on pricing, and it'll be because of higher interest rates plus the impending failure of Carvana.
Yep.
Will somebody swoop in and save them? I don't know if somebody will swoop in and save them. Will they be able to restructure their debt to a degree? Because for these lenders, it's almost like they're too big to fail. Perhaps they can do that, but I think ultimately, this will not be a success story. This will not be something that has a happy ending. I don't believe. That's just me. I could be wrong. Hell, I'm often wrong. But it just seems to me at a certain point, investors are going to get so soured on what has transpired that they're going to say to themselves, why would we want to provide them any more capital so that they can continue to do the things that they've proven they've done in the past? So I think they might have great difficulty in restructuring the debt. I really do.
I think it drives used car prices down, and I think we are going to regress on this path of sight unseen cash offers through the internet. Yeah. I think there's going to be case studies done at business schools that they're going to say, oh, the idea of offering an awesome consumer experience to buy cars makes a lot of sense until you start penciling the numbers and you realize it doesn't pay. I would not be surprised if in 2023 you see a pullback or just generally much more conservative cash offers for vehicles as a result of this. So those are two things that I think we'll see.
Well, only time will tell.
And we'll probably be here to tell it.
To talk about it.
Talk about it.
Yeah.
Thank you, Pops.
Thank you, Handsome.